Hey guys, what's up? Welcome back to the Impeccable Investor. The financial landscape has grown massive in the past decade. Additions of newer methods to analyze, predict, and present data have changed the course of financial framework. One method in the domain of technical asset analysis is trend following or trading. Due to its variable nature, many people are unsure regarding the working ability and performance rate of this technique. So does the trend following work or has it ceased to exist? Let us find out. Further description. Trend following is perhaps the most blazing system in the current financial and contributing world. From basic commodities to Asian goods and services, financial specialists of every kind are enhancing price developments by capitalizing on the momentum of the market. Trend trading is a method of trading designed to take advantage of uptrends where the price tends to make new highs or downtrends where the price tends to make new lows. An uptrend is a progression of higher swing highs and higher swing lows. A downtrend is a progression of lower swing highs and lower swing lows. Ways to utilize trend following: moving averages. Moving averages are the bread and butter of a pattern or trend broker. The basic method utilizes a dynamic average cost for a set number of past dates. Each point on a moving average line is the mean for that day, which makes for a smooth portrayal of a value's development. Dealers utilize moving midpoints and averages to recognize patterns, purposes of obstruction, and hybrids between the various moving mean/average lines, among numerous different strategies. MACD. The second indicator is the MACD, which is a wavering marker that verifies around zero and is a proportion of both pattern and momentum. The count of the MACD follows a similar rationale as a basic fluctuation average. However, it holds extra highlights to give a superior image of a recent moving average contrasted with a more established one. At the point when the MACD traverses into a positive domain, it is viewed as a purchase signal, and the contrary holds true for the negative region. The MACD is generally utilized as a supplement for other specialized pointers and not as an independent tool in trend following. RSI. RSI is an oscillator that endeavors to gauge unreasonable assumptions in a hot or popular stock. In the event that a stock arrives at 70 out of the 100 on the RSI, it is viewed as overbought and likely due to an amendment. Alternatively, a stock is considered oversold when the RSI is beneath 30. A stock with a solid pattern and an RSI of 60 likely has somewhat more journey to travel before halting or descending. The RSI is viewed as a standout amongst other complementary markers and indicators accessible for trend following. OBV. OBV is a pointer that gauges the volume pattern for a particular security or stock. Volume is a significant complementary measure that is utilized to affirm the value and price inclines by deciding if they are happening on a high or a low number of exchanges. For the most part, a high number of trades going with an upward pattern is a supporting sign and vice versa. Any valid reasons why trend following may not work? It is exceptionally hard to estimate the future, and your most logical option is to keep up with the idea of developing an enhanced diversification of your portfolio to reduce risk. You'd be frantic to have 100% of your capital invested in trend following. You'd be similarly frantic to have 0% of your capital presented to it since people thought it was dead. Trend trading is generally a self-fortifying technique dissimilar to relative procedures where benefits get crushed out when financial specialists surge in. Having more trend adherence makes trends and patterns last more. However, it is important to note that congestion is conceivably tricky when trends and various speculators hurry to the exits, particularly as there are different players like risk-avoiding financial specialists who conduct will mode after existing or past trends. Additionally, pattern following as a system has been around for quite a while, and on normal, it's worked regardless of the way that there have consistently been erratic factors on the planet. Any statistical evidence? A factual and statistical investigation is splendid at educating us regarding the past and less valuable in educating us regarding what's to come. Taking a gander at SG index present on the internet, there has maybe been a slight reduction in performance execution after 2009. However, taking the drawn-out view, it would be alright to state that throughout the past 30 years, at any rate, execution has been fundamentally the same as the present. So does it work or not? It's apparently senseless to take a view or look at the performance of any trading methodology or trick in isolation. One of the arguments or claims for trend following is that it gives rise to a crisis alpha, which is a financial statistical measure. To be progressively exact, it has a negative relationship to different and multiple assets in a market. Thus, it is virtually impossible to predict whether trend following or trading works efficiently or not. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss out on any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.